In January 1923, a single US dollar could buy you 17,000 German marks. By November of that same year, that same US dollar could buy you 4.2 trillion marks. We look back at the Weimar Republic as a historical freak show. We see the photos of children building pyramids out of cash, or men pushing wheelbarrows to buy a loaf of bread. And we laugh. We tell ourselves, that can't happen here. We tell ourselves we are smarter. We have the Federal Reserve. We have the world reserve currency. But the math does not care about your exceptionalism. The math is identical. In 1923, Germany didn't collapse because they lost a war. They collapsed because of a specific economic trap, a debt-death spiral that forced them to choose between defaulting on their bonds or destroying their currency. They chose the currency. Politicians always choose the currency. Fast forward to today. The United States national debt has breached $36 trillion. We are adding $1 trillion of new debt every 100 days. But the debt isn't the problem. The interest is the problem. For the first time in American history, the U.S. government is spending more to pay interest to bondholders than it spends on its own national defense. We are spending more on the mistakes of the past than we are on the security of the future. The trap has snapped shut. The cycle is repeating. We are not heading for a recession. We are heading for a 100-year reset. The year isn't 2025. The year is 1923, and the printer is warming up. To understand where your savings are going, you have to meet the architect of the collapse. His name was Rudolf Havenstein. He was the president of the German Central Bank in 1922. He wasn't a villain. He was a serious man in a suit who believed he could manage the economy. When the German government couldn't pay its war debts, Havenstein refused to let the government default. He believed that a default would cause a depression. So, he began monetizing the debt. He printed new marks to buy government bonds. He told the public this was providing liquidity. He told them the inflation was temporary, caused by supply chain issues and foreign speculators. Does that sound familiar? The Federal Reserve is currently running the Havenstein playbook step for step. In 2020, the Fed printed 40% of all US dollars in existence. They flooded the system to save the government from a solvency crisis. They ignited a fire that they can no longer put out. Here is the trap. The Federal Reserve cannot raise interest rates high enough to kill inflation, because if they do, the interest payments on the $36 trillion debt will bankrupt the US Treasury. But they cannot lower interest rates either. If they cut rates, inflation will roar back to double digits, destroying the middle class. They are trapped. In 1923, when Havenstein realized he was trapped, he didn't stop printing. He panicked. He printed faster. He authorized 130 private printing companies to churn out money 24 hours a day. The result wasn't a soft landing. It was the total annihilation of the German currency. How do you know when a currency is dying? It doesn't happen all at once. It happens in 3 distinct stages. We have already passed stage 1. We are currently living in stage 2. Stage 1 is the crack-up boom. In 1922, the German stock market didn't crash. It skyrocketed. It went parabolic. If you looked at your brokerage account in 1922, you felt like a genius. You were a millionaire in marks. But you weren't getting richer. Your money was just getting worthless. Look at the S&P 500 today. It keeps hitting all-time highs. The news tells you the economy is strong. But ask yourself, if the economy is strong, why are credit card defaults at the highest level since 2008? Why is homelessness exploding? The stock market is rising because the dollar is falling. The rich are fleeing cash. They are buying stocks, AI companies, luxury real estate, anything to get out of the dollar. This is the melt-up before the meltdown. This leads to stage 2, velocity. In normal times, money moves slowly. You get paid, you put it in the bank, you spend it later. In 1923, the psychology changed. Germans realized that their money would buy less tomorrow than it did today. So the moment they got paid, they ran to the shops. They bought anything: pianos, coal, antiques. We are seeing the early signs of this now. The buy now, pay later culture. The rush into speculative assets. The feeling that you can't afford to wait to buy a house, because it will be $100,000 more expensive next year. That isn't market demand. That is fear. That is the public losing faith in the store of value. Stage 3 is the finale. In the autumn of 1923, the system broke. Farmers refused to ship food to the cities. Shopkeepers closed their doors. They would not accept the paper marks anymore. They demanded gold, or foreign currency, or barter. When the supply chain rejects the currency, civilization breaks down. In Germany, this led to riots, looting, and martial law. The US dollar is the world reserve currency, so it has more runway than the German mark. But the world is already starting to reject it. China is dumping US treasuries. The BRICS nations are trading in gold. The Saudis are selling oil in yuan. The world is moving to stage 3. The American public is still sleepwalking in stage 1. Inflation is a thief, but it doesn't steal from everyone equally. The most terrifying lesson of Weimar Germany is not about money. It's about society. Inflation destroys the middle class. In 1923, the people who got hurt the most were the people who did everything right. The savers, the pensioners, the people who bought government bonds. Their life savings were wiped out in weeks. But the debtors, the people who owed massive amounts of money, they were bailed out. If you had a mortgage of 500,000 marks in 1922, by 1923 you could pay it off with the price of one egg. The inflation transferred massive wealth from the working class to the speculator class. We are seeing this exact dynamic today. This is the K-shaped recovery. If you own assets, houses, stocks, gold, you are riding the elevator up. If you work for a wage, you are taking the elevator down. Your paycheck goes up 3%, but the price of insurance, rent, and food goes up 20%. You are running on a treadmill that is speeding up. In Germany, this destruction of the middle class created a vacuum. It created anger. It created a desire for a strongman to come in and fix the system. Economic collapse always leads to political extremism. When people cannot feed their families, they stop caring about democracy. They start caring about survival. The polarization you see in America today is not the cause of our problems. It is a symptom of a broken money. So, how does the movie end? In November 1923, the German government deleted the mark. They reset the system. They introduced the Rentenmark, a new currency backed by land and industrial bonds. If you held the old paper money, you lost everything. If you held gold, silver, or productive land, you kept your wealth. The United States is heading for a reset. They might call it a central bank digital currency, CBDC. They might call it a new Bretton Woods. But the mechanism will be the same. They will devalue the dollar to wipe away the debt. The only way to survive a sovereign debt crisis is to own things that cannot be printed. Gold and silver. They are the only financial assets that are not someone else's liability. Energy and land. The things human beings need to exist. Fixed rate debt. If you have a 30-year fixed mortgage, inflation is actually your friend. It pays off your debt for you. The cycle is 100 years old. The debt is $36 trillion. The trap is set. Most people will ignore this video. They will say it's different this time. But in 1923, as the printing presses roared in Berlin, they said it was different then, too. Until the day it wasn't.